Fly the Flag podcast, Mike Faraci, Jonny Fowler. We're back with you again. Short intro. We're going to get straight into it because Johnny's on fire about some stuff, and I don't want to throw it off. I don't want to be the monkey wrench today. Upcoming turbulence, might we say, for mortgage banks? Possibly, maybe, if they're not looking far enough into the future with the way they're positioning themselves.
There's a number of things that I see that, and this is a lot of forecasting, but in another, let's see, 17 days, I'll have 29 years in this business. Now, that may be 29 years, or it could be 1 year at a time, 29 times. That's up to somebody else. But
that's good.
Here's some things that I see that
Can I vouch for you real quick? Because there's a difference between Johnny being 29 years in the business and Joe Schmo being 29 years in the business. Just because you've been doing something for a long time, and I've been running into this in this industry ever since I got into it in my early 20s, is that person in their mid-40s to mid-50s saying, I've been in this business for this long. Well, you could have just been doing a real shitty job for that long. So that doesn't really gain you much credibility. Johnny's been doing it the right way all the way for 29 years. So I respect what this guy has to say, and I know a lot of you guys do also, who are watching and listening to this. So we're speaking from 29 years of good experience here, right?
Thank you.
Yeah, absolutely.
So here's what I see getting ready to happen. We have been, and you're the one who said this, and you hit it dead on, right sizing for the past year. For some strange reason, and this one irritated me also, is all of these alleged mortgage gurus, CEOs, presidents that thought that 2020 was real and 2021 was real.
I mean, it was real. It just wasn't forever.
Well,
it happened.
It happened. So that part of it's real.
But it was always an anomaly. It was always a spike that was never going to sustain.
Yes.
Yeah.
It's like what's the famous shooting star, whatever it is?
Hale-Bopp?
Whatever
something. I don't know. Is it one that has cult?
Halley's Comet. Halley's Comet.
Halley's.
Yeah, you see it every 70 years or something like that.
Okay.
All right. So here's something. We've been right sizing for the past year. This is something that I see coming, and it's coming really quickly, and we're going to start seeing it over the next, and I think we're already kind of seeing it, but over the next 30, 60, 90 days, and I think people need to buckle up a little bit for this, have a little bit of patience. And I'm the first one that always says I have no patience. Patience is for doctors. Here's some things that I think and I see that are getting ready to happen. We've been right sizing for all this time, and that means all kinds of things inside of this business. That means reduction of staff in support staff, reduction of staff in operations, reduction of non-producing production staff, you know, all kinds of things. So companies have been doing everything they can to stay in business. And that doesn't mean that you're profitable. That doesn't mean that you have cash flow. What that means is that you're keeping the investors, the people you're selling your loans to, you're keeping your warehouse lines, your lines of credit that you actually buy and sell these loans on. You're keeping all of those people happy with the way that your books are. And some people are actually being audited on a monthly basis.
Oh, yeah.
To see. So the other thing that's happened is on the backside that none of us in production ever pays attention to. And unless you've owned a company or you've done this, you may not even, it doesn't equate to you. So every loan in this country that I know of, except for maybe for depositories, and it's still borrowed money on that one, is done with borrowed money. What that means is we have a line of credit. So picture a great big credit card that is at some sort of usage fee and interest rate for using it. And we use that money to send to closing. That's what actually closes. We get the collateral back. We sell that collateral. When we sell it, we make a small margin on it. And that's how we operate a company.
Yep. Well, for those wondering, it's called a warehouse line of credit, industry terminology.
So here's what happens when your production shrinks, your lines of credit shrink also. Otherwise, you end up paying non-usage fees. And most of the time, the warehouse lines won't allow you. So if you're closing, and I'm going to use easy numbers again for myself, if you're closing $100 million a month, then in theory, you only need $50 million of warehouse line. You're turning it over twice.
Correct.
If you go from 100 million down to 50 million, well, you don't need $50 million. And that credit is better used somewhere else.
Mm-hmm.
So you give up part of your line of credit and somebody else uses it, or they expand their business or whatever.
And to the companies who have their accounting and post-closing in order, this is a voluntary action. This is something that is happening.
Yes.
On the side of the mortgage company. They're saying, hey, we're not doing enough business. Let's lower this stuff because we don't need that much. We don't want to incur non-usage fees. We want you to be able to lend to more. It's a two-way road, right?
And as somebody not in this business, think about it this way. So you've got $100,000 limit on your American Express card, and you never charge over $5,000 on your American Express card. There's no reason for American Express, because that money is spoken for. There is $100,000 that is spoken for, whether you use it or not. So it makes no sense for either American Express or you to have that available to you.
Correct.
So yeah. Yeah, thank you for clarifying. I appreciate it.
Yeah. In a situation where, pretend like that American Express card is a card that's given for a purpose. Maybe they're saying, here, use this. We're giving you $100,000 in credit so you can go invest in sprockets. You buy $100,000 worth of sprockets, and then you sell them for $200,000, and you pay it back, blah, 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 this and that. But if you never buy more than $30,000 worth of sprockets, then why would they allocate that extra $70,000 to you to be able to use? Right? It doesn't make sense. So along with that agreement, they're probably going to charge you a fee for not using at least a certain amount. Because if you're not using a certain amount, then that's $70,000 that they can't lend to somebody else and make interest.
And they're losing out on it.
Yeah, 100%.
No, thank you. Yeah, no, I appreciate that. So here's a couple of things. So that's what's happened. Now, the industry experts, who I firmly 100% believe in and follow, are saying,
names.
Say it again.
Name names.
Barry Habib.
He's okay.
The smartest, greatest mortgage guy ever in our business.
Yes, he is mortgages John B. the Genie.
Yeah. Yeah.
Yes.
The first and the only that I know of $2 billion originator. So he's not only done it, he's bought it, sold it, packaged it, everything else. So
can we get Barry to shout us out with a Mecca Lecca High Mecca Heiny Ho one of these days, please?
Yeah, actually, yeah.
If you know.
I'm going to interview Barry for the company deal coming up. Awesome. We're trying to get dates fixed and all that stuff. So, okay. So back on subject. So you've downsized, you have righted your lines of credit, all of those things. Industry experts say that on May 10th, which is the magic date that we're all following and waiting for, is when all of the inflation reports, the consumer price index, all of those start hitting in unison, and interest rates will start going down.
Sure.
On May 10th. They may start this month, but May 10th is like the magic date. So it's going to happen. Then we're also in buying season. So we're already seeing an increase in applications. We're already starting to see a little bit of pressure going through on operations, on systems, whether it be credit, whether it be LOSs, whether it be POSs, whatever it is. We're starting to see a little bit of pressure on those. So here's some things that's going to happen, and here's some things that I'm watching. First one is any company that is not planning for this, in my opinion, 30 days ago, 45 days ago, is going to be in trouble, and we're going to have another problem. All of a sudden, production is going to increase. Turn times are going to decrease, which then messes with the psyche of production. All right, I'm putting loans in. We went from 48 hours in underwriting to 72 to 96 hours.
Mm-hmm.
And then what ends up happening is anybody that is in management comes up with this bullshit scenario that nobody could have seen this coming. We didn't know that we were going to get this influx, and it's like every loan officer in the country saying, how did you not know? It's your system. You see the numbers that are going through here. So then we're going to be in that problem where we're going to be forcing a lot of production through very thin lines.
Just so you know, anybody out there, if you want to know if anybody really knows that this influx is coming, if they've ever said the words buying season, then they know. It happens every year.
Can I be very bold?
Please do.
If you're a loan originator and you're watching this, call your president and CEO and ask them, are we prepared for buying season? And then wait for the answer.
Yep.
So I also am a firm believer in the Peter principle. So in my opinion, if you weren't preparing for this 30 or 45 days ago, you're already behind the 8 ball. If you haven't brought back staff or hired the best that's out there that has been looking for a job, and at least, let's say today is April 14th. If you don't have people coming on by June 1st, you're in trouble. That's something that you're going to need to do. The next thing that I'm seeing that people aren't talking about, that's going to piss a lot of originators off, a lot of loan production, and they're going to be pissed that you didn't plan for this.
A lot of agents,
which is prime.
This is like,
this
this is how to lose agent relationships
massively.
Is to not be prepared for buying season
massively.
Yeah.
And if there's anybody in the world that doesn't understand how the mortgage business operates and just wants a straight answer, it's real estate agents, and they deserve it. There's no question about it.
Sure.
My job is to originate. Your job is to make sure that my originations close.
Time and time again, we talk to countless real estate agents, and to a person, all they say is that they want a lender who picks up the damn phone. That's all they want.
Here's the next thing that's going to happen. So we're still watching it. We're actually watching it. It's coming in our news feeds constantly.
Yep.
There's still a tremendous amount of merging going on, which there needs to be.
Sure.
There's too many companies. There needs to be merging, no question. Now think about this. Here's what's going to. This is the one I'm watching, and if I ever was an I told you so guy, this is when I'm an I told you so guy. I'm watching this happen, and I'm reading between the lines on these companies that are merging, and they say things like they needed all of the production that it brought. There may be some redundancies that are canceled out, but we needed the production, things like that. What that means is, if you translate that, is we don't need all that company's underwriters. We don't need all that company's closers, funders, shippers, processors, any of those things.
No,
so they
might need the origination. But
exactly. They need the origination, and their people need more work. So that's getting ready to happen. So I think we're going to have another, not massive, but I think that there's going to be, with these merges, some layoffs that are happening because we're talking to CFOs and HR instead of production, because the production guy knows business is hitting. It's starting. Everybody in the world says May 10th. That's the day it's going to and it already is. It's already picked up. Applications are up. Closings are up. Hell, we had another record month. So
can I give a tip to any hiring manager at any mortgage company looking for quality support staff? If you're having trouble finding people, quit being so damn stubborn and let them work remote.
Good point.
I'm seeing a lot of people out there, a lot of good quality people, especially on LinkedIn. You got the new little things on LinkedIn where there's a little purple circle around your name so you can signify that you're hiring. There's a little green circle around your avatar, your picture, that shows that you're open for work, that you're looking for a job, something like that. I'm seeing a lot of extremely high quality people who are tenured in our industry, who are having trouble finding positions because it seems like when they do find things that are a perfect fit for them, it's required to be in the office. Have we not learned anything since 2020? Have we not learned that we can do our jobs just as effective? Hire people with good character and let them work from wherever the heck they want, because they're going to get the job done better, more than likely, than the best candidate within a 5-mile radius of your office. Just let people work remote.
And if they don't, you manage to those expectations. Part of it is the mixed signals that we got. When all of this started happening, Google was putting out ads every day talking about how much more productive they are. And then all of a sudden, when the pandemic's over and you're not wearing a mask, it's like no more working from home. This was such a travesty. This was so horrible. Facebook, same bullshit story. All of these social media companies, all of these tech companies, same bullshit story. They followed that narrative that said we have to do this. And they talked about how productive everybody was and how happy everybody was and how great this is working out. And then it's like, oh, we don't have to wear masks anymore. If you don't get back in the office in 30 days, we have to terminate you.
It's crazy. It really shows, I think, the need for people to come back into the office to get the production that you want shows you how good you really are at hiring.
Agree.
Because if you're
good point.
If you're not hiring people of good character and you're not able to identify that, and you're just hiring people who are able to complete the task, sure, somebody to fill a hole. Absolutely. So I mean, just hire good quality people, and they'll get the job done from wherever they want. Really, it's gonna be where they're most comfortable. They're gonna be able to get the job done, and they're probably gonna be able to get it done quicker anyway. So,
and I will tell you this. Up until 2020, I was a firm believer in no, you have to come into the office. I would not, working from home was not something, and my reasons for that were because I can't do it. It does not work for me. Yeah. So I knew that it would not work for anybody. For me, working from home, I have 4 furry coworkers that know that I'm not supposed to be working. I'm supposed to be paying attention to them. Yep. My garage is right there. My yard is right there. My pool is right there. I've got errands to go run, things like that. So I, without an office, would screw you to death, and it would just mess with my psyche all day long. So I was one that said no working from home until I realized that some people are better off and they do a better job working from home. When you have an underwriter working from home that has that ability, you will see that their production goes up like crazy when they make, and if they want to go get their nails done at 2 o'clock in the afternoon, shut up, let them do it, because you'll start seeing clear to closes on Sunday at 10 o'clock. And I know that the Department of Labor is out there and blah, 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 all that stuff. But the reality is human beings can manage themselves.
It changed everything. It changed everything for me when the pandemic hit and I started working from home full time, because all of a sudden I felt freed up to connect everything to this. And I had work in my pocket with me everywhere. And that I was trying to avoid for as long as I possibly could. Turns out when it happened, there was no work-life balance, because work is a part of life. And if I needed to do something at 10 or 11 o'clock at night, it got done. If I needed to do something at 5 in the morning, it got done. If I needed to treat my family to a surprise lunch out at 2 o'clock in the afternoon on a Wednesday, we did that. And everything was just a beautiful amalgamation of work being a part of life overall. And it really worked for my lifestyle personally and my personality. I know it's not for everybody, but for me, it was a godsend.
I will tell you one of the things that I believe this, I truly believe this. One of the things that I think is we as humans have to find blame in something. We can't just accept that things are the way they are because that's the way they are. Yeah. So when the economy took a downturn, we had to blame it on people working from home. Not necessarily that it was true, just we have to blame it on something.
Gotta blame it on something. Gotta blame it on something. And more than that, you gotta blame it on something that you're not in control of, because it can't be your fault. Yeah.
They
I hate
So,
they. I don't know who they is, but they are the worst.
So we've got some more bumpy roads coming up for the mortgage industry. If, and this is where I am so thankful. This is where I am not shitting you. Like I said, after that many years in this business, I am so thankful that we have Sherman and Gwen at the helm. I am so thankful that we have Matt and John at the helm.
Yep.
I am so thankful for the team that we have, because and it's just 100% selfish, and I'm just going to throw it out there.
Yeah, do it.
Because I don't have to worry about it. All I have to do is my job. I don't have to worry about our lines of credit. I don't have to worry about our underwriters, our closing time. I don't have to worry about cash flow. I don't have to worry about liquidity.
Yep.
I don't have to worry about any of those things, because in my opinion, we have the smartest, best people at the helm.
Mm-hmm.
And for the first time in my life, I can be an employee instead of the guy that's worried every single day.
I can tell you, I'm on the monthly regional managers roundup call, where Mr. Gwynn gives the updates to all the regional managers in the company, Matt, John, to Tony Casillas, everybody. And then Twyla's on there, and Corey's on there, heads of ops and marketing, and everybody's there to kind of brainstorm and collaborate and stuff like that. But there's always updates, and the updates always include what's happening with warehouse lines. The updates always include what kind of volume we're doing, what we're doing to right size in our own way, but also how much volume we're currently set up to handle if things spike and pop off overnight and stuff like that. It's like the updates are never just, we need to cut this, we need to cut this, we need to do this, we need to do this. It's always like, we understand that we're rolling into purchase season. We can probably see an uptick if rates unexpectedly drop, if da-da-da, this and that. Just so you know, between support staff and warehouse capacity, we're currently doing this, but we're ready to handle this number. And it's comforting.
I don't know if they still do, but back in the old days, we referred to it as a bulge. So, right now we're doing $500 million a month, but our bulge capacity is 700 million kind of deal. And that let you know, that was a reassuring thing to know that we can handle theoretically 130%.
Yep. Absolutely. Love it.
So there's some bumpy roads coming, but for the people who are prepared and have the systems and have the foresight, we are more than good. Those are some things that are happening.
Yeah. And again, if anybody's listening and you're not confident that your company is prepared to properly serve your customers during purchase season, let us know. This isn't necessarily a recruiting pitch, just wanting to put it out there so you know that you're not just stuck. That's not really that's not a thing. Any successful producer in this industry probably already knows that, but it's not always top of mind because we're creatures of habit. So if you're open to a conversation, let us know, because there might be something that you're looking for that you're not getting right now.
I'm going to add two things to that. One, if you don't think your production warrants the ability for you to call the owners, the president, the CEO of your company, let me know. I'll make sure that you understand that it does. The second thing that I want to make sure everybody knows, if you don't know what questions to ask of your management team, send me an anonymous email, send me an anonymous text message, whatever. If you don't want to, I'll give you the information that you need to ask to find out, because that's the one thing. One of the things, and I've said this 100 times, and I'll say it for the rest of my life, with my last dying breath, I will say this. If you have a good originator and he is in a bad system, he will do the bare minimum it takes for him to live inside of that system, and he will be angry and upset every day. But if he can do 20 units a month, but your system only allows him to do 5, he'll do 5 units a month, period, no question. So I want people to understand that you have value, massive value, and you deserve better.
That sums it up. If you feel like you're undervalued, it's probably because there's the level of transparency that should exist does not. There's a big incentive for a company to make producers especially feel undervalued, and it's so they don't have to share how much revenue is actually coming in based on what they're producing. So if you're craving some transparency, let us show it to you.
One last thing.
Not that we're the only company in the world that can do that. I don't want to say that, we're this unicorn type of thing, but we are doing that. And there's a lot of companies that aren't.
I can think of a dozen companies that are ready for this, and I'd be more than happy to give those names out too.
Yeah, that's great.
I will always throw compliments to people. Kevin Pirano runs an amazing company. No ifs, ands, or buts.
Former PRMG employee.
I'm sorry about that. Explains a lot about you.
That's funny. Yeah.
All right, let's sign off, brother.
Sounds good. Have a good one, Johnny. Thank you all for watching, and we'll see you on the next Fly the Flag.